All right, we're live.
Awesome. What's going on, guys? We got a fun day ahead of us.
Busy day here.
Uh,
It's gonna be cool.
yeah, Monday mornings are always awesome for us. Let me just log in here again. Monday mornings are always exciting. You know, we got the whole week to look ahead, right? So that's always a great time for us. And let's jump right into it. We're gonna be looking at a few names today. Um, so first thing to note, guys, is that the volatility and the realized volatility is finally at the same level. Right? So implied volatility finally went above realized volatility. So what that basically means is that, and you can see that right here, this is our variance risk premium. And this is our 10-day implied volatility for the S&P divided by how much it's been moving. So if it's been moving, 20% and implied volatility has only been 20%, then it's going to be just one. It's going to be one implied volatility over realized volatility. And we're seeing for the first time implied over realized. So holding options was paying out, the last, of course, like 2 months. And finally, the script is now switched. So
Crazy
right away, we
times.
want to be looking for stocks that have, high implied versus realized. And we're going to actually jump into a few names that are pretty popular right now across the board. So one of those names are INO. So INO, they did they are in search for the COVID cure, right? So, and they've been getting a lot of attention here. We have 52,000 people watching this stock, which is insane, right? Let's see what the message volume is here. It's 17,000. I don't even know if Apple gets 17,000. Let's see.
Yeah, that's insane.
Yeah, Apple is only getting 5,000 right now. So this thing is getting 3 times as much noise, 3 times as much notice. So let's go back to INO. Let's see what the sentiment is, the general sentiment. Hit the refresh. Okay, so retail super bullish here. And this is we like to call this dumb money because you don't have portfolio managers typing in on stocks which INO to the moon. So we like to say that these people are dumb money, and dumb money is extremely bullish. Doesn't mean the stock's going down, right? Doesn't mean the stock's going down. I mean, like, look what happened to Zoom. The market can be irrational for such a long period of time, right? So it's saying the retail's bullish here. So let's try to look away from price and see if the options are too expensive. And so what we see here, okay. So what we see is that implied volatility is increasing, right? It's way above our forecast of volatility. Okay. What that means is that INO is moving not enough to compensate to be short volatility. So shorting volatility, to be long volatility. So shorting vol is making a lot of money right now. Okay. You can see that the relative action is insane on this thing. So people are buying it up, like buying up these options like crazy. The options are insanely liquid. There's so much buying and selling happening there. And we think that there's a huge opportunity to short near dated options. Okay. Let's see if there's any earnings coming out with this thing. No earnings anytime soon. Okay. So the way you can structure this trade is simple. Let me just log into my TD here. Show you guys a trade that is not a bad idea.
So you just breaking them down for me, Jordan?
Yeah. Oops. Sorry, 1 second, guys. Bear with me here.
Yeah, we should have that loaded next time. It's all
Yeah.
good.
Yeah, good to know. Good to know. Okay. So is there any questions about INO right now, Sean, in the DMs here?
No, let's keep rolling.
Okay, perfect. So yeah, you guys can see basically skew is flat. Okay, so we'll look at the 10-day option because that's what we want to trade. There's a little bit of upside skew, but skew's flat. Obviously the volatility is to the upside, so you're going to have the call side be more expensive than the put side. Also, that's where the demand is. You can see from retail traders. You know, if we look at the skew, you know, we're hitting near all-time lows. So at the end of the day, these options are pretty much dominated by retail traders, and for that reason, we want to be fading their insensitivity. So they're not sensitive to the price of options, right? If it's $5 versus $6, they don't care, right? They don't know how to price these options. So we can actually make money by taking advantage of their insensitivity, by taking advantage of their carelessness, right? They don't care about that. They say, I know it's going up. Give me the calls. Okay. If I have to pay $5 for it, give me the calls. I don't care. I just want to buy the calls. And so we can take advantage of that. We can say, well, guess what? An option is priced using volatility. So we know that, and they don't know that. So that's an informational advantage to us, right? We can make a trade there. So let's just quickly go and look at INO here.
Up there, Jordan. Like it's the biggest difference between professional and retail traders, right? It's like
Exactly.
Professional just thoroughly understands the product, right? The game hasn't changed. Buy cheap, sell expensive.
Exactly.
Right? Like everyone, don't be just using it to take directional, right? Like when we look at something like this, the huge edge is like we can see if it's cheap or expensive. Right?
Look at this.
Where it's cheap and expensive in the option chain, even. So we can then use that to structure out trades where we can capture that price inefficiency.
So look at this here, right? The straddle is going for $4.30 on the 15 strike, and that's expiring in 4 days. So you're seeing implied volatility of 315% for the at the money straddle here, which is ludicrous, right? That is insane. And so we can sell it. And something that we talk about with our group members is hedging our deltas so that we can profit, make a profit there. The thing is, though, it's a little risky because you don't really want to be buying the calls. You don't want to really be putting on an iron condor here just because the calls are so expensive. So you want to actually be taking this risk and holding the naked straddle. Okay.
Why is that? Because the price of the wings is just too much. It'll eat up the edge.
It's just too much. Yeah. So you would size it accordingly. So you'd size it. So even if there was a blowout, let's say like the stock goes up 50%, you wouldn't blow up.
Yeah. You're not at the soup kitchen.
Exactly. You're not at the soup kitchen. So it's about if you're going to go naked, you just have to understand, like, size your trade appropriately. Yeah. Yeah. My hair's all messed up. Okay. Let's look at USO. USO is a hot topic again in the news.
This is our favorite trade.
Again. It's down again, Sean. Can you believe that, dude? Down, almost at $2.
We should have held on, man. We shorted it down from 7. We should have held on. Or I guess we sold out lower. It came back up a bit and then.
Yeah. So lots of action going on again. And look at this, man. Call skew is it's coming down it's coming up like crazy. People are starting to buy up the calls again. I don't get it. Guys. Let's see how much retail are bullish here. I'm actually very curious. What do you think, Sean? Is everyone going to be bullish on this thing?
91%.
Oh, wow.
50, everyone thinks it's going to the moon. I don't think people have figured it out yet.
But look.
We've talked about this for 2 weeks.
I know.
A lot of smart people are telling people to stay away. I don't think people have figured it out yet, and that's good for us.
It is, definitely. So, wow, retail's actually... They used to be really bullish. It used to be looks like 80% bullish, and it's come down quite a bit. So there, your mic's not working.
I thought it would have stayed up there.
Yeah, me too. It looks like they're finally coming to their senses here.
Slow and steady.
But let's take a look at volatility here for USO. So first thing we notice is that just because I know a lot of people are buying up out of the money long-term options, and let's understand why these are overpriced. I think that's a good thing to do. So what you see is that if you look at realized volatility, right? This is the yellow line here. You can see that if you're buying a leap, let's say, right, you are paying Let's go to the leaps. So the leaps are at 84% implied volatility right now. Okay. And if we look at like long-term volatility for USO, so we have to compare apples to apples. We can't compare today's volatility with a year from now volatility. So if we look at apples to apples, USO volatility is only 59% over a year. And the options are going for 84%. Right? So that's pretty pricey. If USO only realizes, 60%, those options you've overpaid for. So that's the first thing. Buying leaps is not the answer here because you're really overpaying for them. And we can quickly just go and see that. Like if we go to the, we have a little pricing tab. Let's say we look at the Jan 2021. Okay. And, we look at the $5 call. We look at the $5 calls. And right now, volatility is what we say 88%, right? So
yeah,
these options are only 15 cents. And you might be like, wow, that's a steal. That's a steal, right? They're only 15 cents. But if we actually look at the realized volatility for these things, oh, sorry, it's 57. Right? It should actually only be worth a few pennies. It should only be worth a couple pennies, 3 cents. So you're really overpaying for these things, even if you're not aware of it. Okay? So these options are extremely expensive, guys. And if you like the stock, buy the stock. Don't buy the options. They're too expensive. And even then, guys, I wouldn't be recommending buying the stock here. It's just so dislocated, the price. There's got a lot of things have to happen.
Short opportunity here.
Okay, so it's starting to fade out. It's really starting to fade out. So you'll see this actually, Sean. Where was I? You'll see that I'll show you guys. I thought it was really cool here. Just give me 1 second. Okay. You guys will find this probably very interesting here. So if we look at, let's say start date is April. Okay, and then we'll go to today and USO. So look, check this, guys. Check this out. You'll see that. So this is the inflows into the actual ETF. And look at this. Look how much inflow came in. Here, maybe I'll go back a little more so you guys can really understand. How much retail flow actually came into the market over the last week, over the last month, right? Just to give you guys a sense of why prices got so dislocated. Just give me 1 second, guys. Okay, this should work. Okay. Look at that. Do you see that, Sean?
Jesus.
This is all retail coming in.
Just coming in.
Look at that. We've never seen that before. Right? And they've just come in, bought up so much USO, which pushed up the price of the futures curve. And of course, there was a huge opportunity there. But finally, if we look, I don't know, can I zoom in here? Okay.
You can see the most recent bar, it's come back down.
It's come back down big time. Come back down big time.
Huge.
Here, let's pull it up here so you guys can get a good look. Look at that, right? The last 2 days, Thursday, Friday, people started to realize, hey, you know what? Maybe buying USO here is not the greatest thing. So it took a little while, but finally they're realizing it. So yeah. That's what's happening around USO. And then we'll look at Boeing real quick.
Yeah, here before we hop to that, we our buddy Hans wanted us to take a look at BMY.
Yeah.
So we're gonna look at BMY and then we're gonna look at Boeing as well.
This is an earnings play. Let's see. 20. So this is 2 weeks from now, earnings play.
So probably just a non-vol play.
Yeah. What's going
Or
on with this
a
company?
non-earning.
Is there well, I think something happened to this company because the data is getting a little wanky here. Let's take a look.
BMY.
Yeah. Yeah, it looks like is Hans in our group?
Yeah.
I guess he was looking for cheap fall stuff, and then this popped up. So, Hans, this one looks like there's something going wrong with the options data. I'm not getting a good read on this. I believe that's why you the implied versus realized was very cheap. I believe that's why you pulled that up. You have to ignore this one.
Okay, let's hop over to BA then.
Right? Yeah, and Hans, just so you know, like a negative sign. So let's see if I go IVV as forecast. Okay, maybe not.
Yeah, let's take a look at it in the group.
Yeah, we'll take a look in the group, Hans. Okay.
Let's take a look at BA though. BA
Yeah.
is interesting.
So here's Boeing. Implied move pretty standard, just a bit above forecast. So it's okay. It's not. There's no trade right there. But if we look at the earnings, you can see that the implied move, 10%. That's extremely expensive relative to historical moves. Okay, and one thing to note is that on average, Boeing actually overestimates the implied move, right? You can see that right here. That buying options has been terrible idea the last 12 quarters, right? If we sell options, we would have actually made a ton of money. So for that reason, I'd be looking to sell volatility on Boeing. Even given the recent macro news, the thing with Boeing is that, and the thing with all equities that we're noticing right now is that the stock is correlated more with macro vol rather than single event volatility. So that's my view on Boeing. I'd be selling vol for Boeing, but in terms of implied versus realized, I don't think there's any edge there of non-event volatility. What do you think, Sean? What's going on? Any other questions there?
No, I'm not seeing any other questions here. But what I was thinking was like, so do you think there's enough of an edge here for anything?
For Boeing,
Yeah.
So volatility is not out of line. Like it's really not out of line at all.
Mm-hmm.
However, I think the implied move is out of line.
You think so, eh?
Yeah.
But even though our forecast is still relatively high as well.
Even though our forecast is still relatively high. So you can see here. So look how good this is. This was our forecast of what implied volatility should be before the event. And you can see how close it is to the implied move.
Yeah.
Right. I put a lot of work into trying to figure out, okay, what is the implied move going to be before the event?
No, it's dope. So just for some of our group members that are in here, how big of a difference would we want to see there before we think the edge is enough?
So this is not for post earnings. So this is not for implied vol today versus event move today versus after the event. It's for before the event. So you want to get let's say 3% before the event. And then hopefully that expands as we go into the event.
Oh, okay.
So you buy the options and then you sell it before the event.
Oh, so that's for trading into the event.
Yeah.
Okay, but if you wanted to trade just the event, you would be comparing the average move to the implied move.
Got it.
Perfect. Well,
and historical straddle P&L as well.
Mm-hmm. So with this, you're basically saying sell vol. If you wanted to isolate the event, sell vol. If you wanted to trade into the event,
there's no real trade. If you're going into the event, there's no real trade, right? It's like,
what if we look at if you go to the vol trader tab.
yeah,
I guess this one might be a little tough because it's so close to the earnings.
yeah,
But if we were a little further out from earnings,
yeah,
and you saw a difference between current implied vol and then our forecast on the earnings page,
yeah,
couldn't you sort of use that as like a
yes, as a trade for sure. Like,
use
so
that as a trade?
this is too close though. This is only 0.3%, 0.2%. But if we look at Apple, let's see if it changed from our forecast. Right. So if you look at Apple here, okay, so this has actually been increasing. It was down to 4% the other day, but the implied move is looking like it's going to increase going into the event. So you can buy and straddle, and then as we go into the event, it increases. This is only 1%. It's not enough for me to do anything. If it's more than 2%, I'll look into it. I can't hear you there. You're mute. You're mute.
Oh, no problem. Sorry, I'm still getting used to this new mic.
Okay,
so it looks like we don't have any questions this morning.
Okay.
So we could wrap it up there.
Cool. Do you have like a switch there on your mic?
Yeah, so if I look here, I just hit this.
Gotcha.
And then I hit it again, and now it's unmuted.
Gotcha.
All right.
Okay, so
if we don't have any questions, we'll wrap it up there. Shoot us a DM on Instagram or on here if you want to chat about any of these trades we've looked at. Let me know if you take any of them. Right? INO is looking like a really good play. That would be the one that I think if you want to watch this video back and look at that analysis again, that would be the one to look at. But let us know what you guys choose to do and if there's anything we can help you with. So
awesome.
That's it, though. We're going to let you go. Take it easy, everyone.
All right, guys.
We'll see you tomorrow morning.